We have Mr. James Oni, Mrs. Temitope Adeosun, Managing Director of FundQuest Securities, and we have Mr. Said Bashar, Managing Director of Meristem Stockbrokers, and of course John Briggs. John Briggs is the regional manager, regional coordinator of SEC here in Lagos. So I guess he'll be joining us shortly. Right. So, like the MC said, we have very few questions. We just want to get our panelists to further educate us on areas, on other great areas that perhaps they've not spoken about, or we need a bit of clarity. And since they are experts in various fields, we need them to talk to us about how the new tax law will affect those segments. We have operators, we have regulators, we have someone that also a practitioner, a tax practitioner amongst them. So maybe I should start with Mr. James Oni, talking about how the current tax law, what's the macroeconomic implication of this? How does the reform fit into the broader fiscal and monetary policy in Nigeria? I think we need another, yes. So you are welcome, Mr. John Briggs.
Okay, thank you so much for the question. So when you talk about diversification in Nigeria, okay, when you talk about monetary policy in Nigeria, you talk about those laws that government puts in place in order to ensure that they generate revenue. And I know most of the speakers have been talking about the area where they generate, government is taxing, capital gains tax applicable on sale of shares, subject to certain conditions. Okay, I guess there's a reason why the government has to do that. It's not if I'm speaking for the government. Okay, I think it is just to ensure diversification of sector, because if you look at the Nigerian sector, we have a kind of over-dependence on oil revenue. So the reason why the government is actually diversifying to other areas of the sector in terms of digitalization of the economy, right, and all of that. So the essence basically is to ensure that Nigeria don't focus only on oil revenue.
Mr. John Briggs, and we'll be looking at being a regulator. It's necessary to look at how the Act consolidates the existing 4 tax laws into one, and how ready is SEC to work with the FRS? How ready are you?
Okay, so that would be NRS.
Yes, from January. Yes.
Okay, so I think you had asked that question earlier during the question and answer, and I mentioned the issue of the Financial Services Regulatory Coordinating Committee, and also the CAMIC, which is the Capital Market Master Plan Implementation Committee, right, where we have already worked with FRS before on implementation of where we're looking for exemption for taxes for collective investment schemes and REITs. So we work together, there is a coordination. And for me, what is important, because I also had listened to a few conversations about data. Data becomes important. From operators here, transparency and accountability and fairness is something that helps to boost our market. So we expect that while they share information, because there is going to be some kind of synergy to automate a system whereby while you're reporting to FRS, let me give you an example. If you do an IPO today, that IPO will generate some tax return somehow. True. And when you make those returns, it's important that there should be a backend for you at the FRS or NRS to be able to determine what is happening. So even for issues of e-invoicing, it's also important for us because we charge fees based on transactions. So are you also interested in it? So that synergy has to exist. The Financial Services Regulatory Coordinating Committee will also have to help. I think there's a subcommittee there that will meet together at that high level. We are also dealing with CBN, which is also involved. I think TMO will also find themselves there somehow. There's a whole lot of coordination that have to happen at that point, and the assurance is that such coordination has already existed.
So just build on what you said, what you already have, or activate it.
Yes, no, it's already activated. We have relationship.
Okay,
what is important now is for us to start talking about this volume of data accuracy that determines what people are paying. That's where we need to come together.
All right, excellent. It appears the regulators have it together. So perhaps the operators now will need to maybe get a feel of the thoughts of operators. Said spoke about the debt equity mix earlier in your paper, and you would like trying to profile the impact of the new tax law on which of this segment of the market will be impacted most. You want to share or elaborate more on that?
Yeah, thank you so much. I think if you look at it by default, so we know that when a company raises debt, the interest payable is tax deductible, right? It's a shield for such company. But when, from the new tax laws now, there's a cap to that, more so that if, for some companies, especially for companies quoted in the exchange, some of them have foreign subsidiaries or foreign parents who gives them loans. I mean, we know that so well. And such interest that is now capped may affect, if you look there in terms of the advantage that provides for them. There's a limitation to that. Before there wasn't that cap. Within the cap of 30% or so on that interest deductibility.
Yes.
Companies will now begin to look at it. So which ones is much better for me? Should I go by the way of
equity,
debt, or equity, or hybrid? And because not only that, people that will even buy their debt as well, because there's also tax implication for the investors that would also key into their debt, if it is public debt, if it is not debt from their parent company. So whichever way you look at it, it has implication. So it may make primary market in the equity space much more attractive, or we may have more companies patronizing equities market now compared to debt market. It also lets the CFOs of these companies, they have to look at their template. So look at their capital structure to look at what is the implication, which one provides a better advantage for them, and they will look at the mix.
Interesting. Then let's talk to, maybe we look at talking to Mr. Adeosun now, trying to get your feel regarding what do you think the investors, especially retail investors, what do you think will be their takeaway from this, or what will be their reaction to these new tax laws?
Okay. Thank you very much. Just like I think one of the speakers spoke earlier, that the way an average person looks at a taxman is the same way you look at a policeman. So what comes to mind of an average investor is, how can I avoid this tax or reduce it at best? And so for retail investor, it's two ways to stay completely out of it, especially for those who operate in the capital market, or to find a way to reduce it, the exposure. For retail investor, what the market classify as retail investor is perhaps those that transact below 50 million, so to say, per annum. And so for those who have that lower turnover, they may not have much impact. Then again, you look at those who trade more often, you know, that can have excessive turnover of 150 million, you know, as this new law says. What are they going to do? So two things that comes to mind is the issue of capital gain tax for investor. How can I avoid it, or at best reduce it? So what we expect to see in the market is perhaps more transaction, you know, and we can look at it two ways. So it can create liquidity, whereby compelling people to reinvest, you know, their gains in the market, and that's positive to the market. And again, you look at it that for retail investors who don't have long-term capital, that who you don't want to invest for so long a time, that you have a time frame to invest in the market, and your turnover exceed the threshold that has been set, then you may have to rethink. So investors generally, retail investors have to rethink their strategy around investment.
So it appears that both the capital issuers, the companies, and investors will need to rethink how we need to develop a template that suits them. Is that what the operators are saying? Bashir?
Yes.
Okay, so it means therefore it's too early to call the probable direct impact of this tax on Nigerian capital market. Bashir?
It's two ways. We can say directly that from the provisions now that you have, you know, the new laws has raised the minimum to 150 and to capital gains to 10 million.
Yes.
It is direct. We can say it is positive for the retail investors.
But don't you think if you look at the composition of retail investors, should define retail investors as below 50, people trading below 50. So are they the one directing the market?
Definitely. So I don't think we should wish away the contribution of retail investors in the market. It stabilizes the market as well.
Right.
So they have a role to play. Even if they control 20% of the market, it has impact. And that is one of the reasons, if you remember that, before now, in the bond section,
right,
FGN, there wasn't retail bond. FGN had to create savings bond to also stimulate savings from the, exactly. So retail investors, they stabilize the market, so they are also important.
Right.
But of course, more in terms of impact, it would have more impact on the high-end investors.
Now let me come to you, James. In the morning, one of the papers, one of the high points of the SEC DG spoke to the need to be careful on how we implement. Great law, but it's not a bullet point that cures all ailments. What do you think will happen if we poorly implement this?
Okay, so definitely, I mean, from the DG's paper, he mentioned something. He said that a good law, poorly implemented, might be a bad law in practice, right? So that means that if you look at the history of the laws that have been made as regarding tax in Nigeria, you will realize that it has not really come to light, right? And if you see these tax reforms now, I mean, everyone has high expectation. I mean, if you see the way this tax reform has been publicized, the publicity that has been given, and I also appreciate the committee, for giving some kind of a timeline for taxpayers, stakeholders to familiarize themselves in terms of putting their system together, their records and keeping records. So for me, I think if it is poorly implemented, definitely it will reduce investors' confidence in the capital markets. People will not be able to invest, and in fact, foreign investors as well. I remember even in January 2025, when the CBN implemented these what we call the FX code, right? So, I mean, the FS code means that there's going to be some changes in the forex, and foreign investors, they have to pull out their funds, and that really affected the capital markets. So I feel that if it is poorly implemented, it's going to cause a lot of negative perception, okay, in the tax system, and that is why it is always important that we have put on this kind of session, so that we will be able to exchange handshake with securities and FIs as well. Yeah, thank you.
Thank you so very much. Now, John, you spoke about the existence of a coordinating center for all the regulators. You spoke about CBN, SEC, FRS, and then maybe a few other entities. Yeah. Well, have you given thought to regulatory arbitrage in case this happens? And what are you thinking about mitigating that?
Okay, so before I talk about the regulatory arbitrage, I just want to add my voice to issue around impact for retail investors.
Okay.
So for retail investors who actually invest through the collective investment scheme, right? Because we have encouraged retail investors because they won't be able to, they don't have the capacity as institutional investors to understand some investment schemes. So they are all encouraged to invest through the collective investment scheme, so which is a pool of fund. So if that fund has an impact, definitely it has a way to impact. Because the fees go round, right? So they will impact it somehow on that pool. Then arbitrage. So for us, I said, what we have looked at, first I've initially spoke about data sharing, right? So it's important. So at this point, SEC is looking at having some kind of uniform digital reporting and invoicing system with FIRS, which is what we're doing then. Of course, we're also going to encourage risk-based supervision so that everybody will be involved. So we want to be sure of those, you put them in the pocket and you begin to monitor those who are likely to violate. And you now be monitoring those ones more frequently, right? And you want to do that. So we're looking at that. Then of course there will be some kind of independent oversight, which the law has already provided, which is the tax on board. So that is very important. And we cannot overrule the issue of CAMIC, which is what we still insist that we want to work with. Apart from market development and all that we are planning to do, a joint tax board is going to be proposed under that CAMIC, just the way we did it the last time. If we see that it can be suited under CAMIC, we can think about it under the FSROCC, so that we'll be able to achieve that. So for SEC, that's what we think, and we believe that fairness must be visible. SMEs must not be seen to be treated unfairly. You understand? Because if they become, in fact, they don't need to seem like they are the target for this tax, because you have to do some exemption at some point, and you can go around the other way to see how you can collect those monies from them. So there has to be some level of fairness in implement. So for me, I believe that with proper coordination, we should be able to achieve. But there must always be crisis between regulators. When you bring a new law, where there are existing framework,
interpretation will also differ.
yes, where there are existing framework, and you see that it's important that we have to coordinate and try to get interpretation, because interpretation guide. So what you as FIROS is giving out to the public should not be different from what we are also communicating or CBS. So by so doing, we have that uniform guidance code.
So the communication should be central. kind of.
Yeah, it should be something that at the policy, you know, at FS ROCC, all the leadership of these regulators are seated there.
Yeah.
And they have subcommittees. So let there just be a uniform guidance code which can be used to communicate. You at NRS, you know the language you put it, but it should interpret what has been agreed at the FS ROCC.
Yes.
So for me as secretary, let me just also interpret what I'm doing to
Yes.
my regulated entity, Syrian as well, so that we can avoid those simple arbitrage. Yeah.
All right, thanks. And the lead-on question I will be asking perhaps you has to do more with the, you said risk-based supervision. Is that taking effect almost immediately or that takes effect January?
Okay, generally at the FS ROCC, we have a joint risk-based supervision. Seated here is one of my colleagues that is part of that team. Right, so it's something we're already doing. So by the time we get to January, we just add it up. Because if any of the big five is seated there, you know that there is a risk-based supervision that happens.
Yeah.
You know.
But that happens within for all entities regulated by CBN already.
Well, that is for that is significant
Banks.
institutions, right? So we look at them. So when we are looking at them, they are looking at them from CBN perspective, from SEC perspective, from SCUMO perspective.
All right.
So is even NICOM is also part of it. So is something that is full. So by the time we are
All operators within the financial
by the time we want to collaborate with NRS, then of course you see that the taxman will also be on
well informed
so
and have access to all information.
so
all right.
maybe there will be nothing to hide at that point.
Okay, thank you very much. So let me come to you again, Bashir. This talk around in the market post January. What are you like? What would like to happen in response to this? I'm talking more about the primary market. Will it be more of IPO? Will it be more of right? Will it be more of a mix, or will it be more of esoteric products that you see happening more in the market?
So there is a tendency to say it is going to be more of IPO, PO rights issue relative to debt. If you look at it, in 2023, about 1.5 trillion naira was raised through only just commercial papers. Though, because of high level of interest rates, people were taking advantage of CPs. And that came to about 700 and something billion naira in 2024. Much maybe half of what was done in 2023. Year to date, we have done about, market has done about 600 billion in CPs. That is 2025 year to date. And that is outside other debt instruments that my operators, companies have raised. And in terms of, apart from the regulatory induced IPOs, the banks, we have seen a few firms coming to the market through right issue to shore up their capital because of the risk of FX, impact of FX in 2023. Exactly. So, and we are expecting insurance companies, which is also regulatory induced, to follow, perhaps in 2026. So beyond that, if the cost, based on what we have explained, we have discussed so far, the cost of debt is likely to inch up. And because of that one, it may be a disincentive for the debt instrument. But we need to look at it, as we said, CFOs, issuers,
as an entity rather
yes,
market-wide,
and the advisory. We need to look at our template, our models, and look at what is the mix. What does it look like? And that will determine the net. But the default answer is that primary market from the equity side is more favored, or more favored relative to a debt instrument.
So, from perspective of portfolio investors, how do you think that will it be more of equity or debt-related instruments? What do you see in 2026 going forward?
Yeah, post this Reform Act or post implementation of it, we can look at investors in two dimensions. So we spoke earlier about the retail investor, what retail investors are likely going to be doing. Then you look at the institutional investors or the large corporates or the HNIs or ultra HNIs, what they're likely going to be doing. Just like I said earlier, the first point of call is to re-strategize. For retail investor, who will likely do turnover less than the 150 million, it may still be neutral. I think what may impact them going forward is re-evaluation and review of models. What we see also often in the market is that you have retail investor or some investor, we call something S mentality, where people just see stock going up without doing proper evaluation, and you jump into the ship. That will likely change going forward. So you're likely going to see more review, more analysis, about companies, about listed companies, and how companies are likely going to benefit from this tax, and again, perhaps maybe improve market credibility. So you look at companies that you want to rely on, because what seems certain, with this reform is it's likely going to be enforceable, because it appears there is no idle place for anyone. Just like you said, the regulators are working together, they are re-strategizing. So it appears there is no idle place. So what retail investor and even institutional investor is to evaluate properly on companies, review companies' credibility based on tax, because for institutions that try to avoid it, perhaps it will be waiting, to eat them. And
that's very interesting. I would like, thank you, Temitope. I would like to have a share that with this aid price discovery, if regulators are talking to each other and they have data, with this aid price discovery in the market, would it create more efficiency? Are you likely to see more volume happening?
So, yeah, price discovery.
Perhaps that will be the last question I will ask you before I let you go today.
Price discovery is there are a lot of factors that contribute to price discovery. It gets increased liquidity, the stock is traded very well in the market. There will be price discovery, right? If there is transparency in regulation, if there is an oversight function as well, it also helps maintain market sanity and transparency.
But with this cooperation, you see,
definitely is a plus.
So
it's a plus. It helps to fix the market and ensure that there are no gaps in oversight function. And marketing, everybody is watching. Everybody knows that we are under watch, and everybody behaves. Also, it helps in price discovery.
all right, thank you so very much. Let me have John make a final comment. John?
Okay, thank you. For me, if you see the president, I guess, and you're in Lagos, you will understand how he implemented tax in Lagos State, which is helping today. Lagos seems to increase a whole lot of revenue. So if you play that back, so now you see that this tax law is going to be implemented. What it means is that people should, I know the MC was saying that we should go and look at tax pro so that we'll be able to understand and be guided. Another thing I would like to say as a last word is that for the artisans, I see the challenge from where you're coming from. So my appeal would be that if we're able to coordinate artisans in Nigeria, which is what we are able to, if you travel out, before somebody comes to you to do a job for you, he has some kind of trade test. You understand? Even if you meet a mechanic, he has some kind of something that shows that he has learned what he's doing. But in Nigeria, we just have people who just wake up and decide to say they are mechanics. Nothing happens. So before you start to register those people who you now want to put in your tax record, let it also be that they have some kind of trade test, so that at the end of the day, so that it will help. So those are my final thoughts, and I wish
Thank you
us well.
so much. Let me have James give us his closing thoughts on all this we've been discussing since morning.
Okay, my final thoughts is going to be that I think it's a time taxpayers and tax authorities begin to look at their records. You now begin to align your books and records to ensure that it meets up with the tax reform. Okay, that just like I said earlier, that is the reason why the committee has also given that timeline, so that you'll be able to understand the nitty-gritties behind the tax reforms as well. So, I know we've discussed a lot, and I know that companies are already planning their activities to ensure that it aligns with the Reform Act. I mean, there are some companies that even what we do basically is to estimate, right, what the tax implication is going to be for their records. Like, I know that there's a certain of our clients, and I'm not to mention we are already doing that for them, and we're already putting things in place to ensure that even as little as our tax computations, right, and returns, we're already aligning it with the Tax Reform Act as well. And I would also like to say that, I mean, beyond the Tax Act, there are also other obligations in the Nigerian Tax Administration Act, which companies also need to look into as well. So my final thought is going to be that the tax reform has come to stay. It has been signed. So what we just need to look at is how to align ourselves to the tax reform, and especially the capital markets. Really, I think even the SEC needs to do more of education, because I hardly see SEC doing much of that education part. Okay, to retail investors. I mean, I was looking at this real estate investment scheme. In the tax law, there is 75% of incentive if you distribute that dividend to the investors of real estate investment schemes, is going to be exempted. But you see that because of lack of taxpayers, people are not investing. It's just there.
Those are some of the things I get we've spoken to since morning about education. Okay, unless Temitope has a final closing remark, and then, yes, you can.
Okay, thank you. My final take on this is for investors, both retail and institutional investors, to watch out for corporate governance. That's going to be a major evaluation point going forward for investors. Just like I think it was Dr. Latindi that spoke around the 5 million penalty. So you can imagine if an institution that you've invested in, has such a multiple, it's going to impact on, what comes at the end of the day, the bottom line of that company, and invariably, what comes to you as dividend. Benefit of investing in capital market is either you get capital gains or you get income. And so we should watch out for that going forward. The law has come, and I think it has come to stay.
The law has come to stay. Please, a round of applause for my panelists. Such a great conversation with Tope Adeosun, Sahib Bashir, John Briggs, and James Oni. And key takeaway since all this conversation from morning is, one, that the law has come to stay. Maintain corporate governance. There is so much handshake between the regulators, and there is no hiding place for anyone. And it's a new day for the capital market, and scholars will say that perhaps there is a positive correlation between the new tax law and the capital market, and that is to be seen. But from all intents and purposes, from what we've heard today, there's going to be significant uptick in the market, both in the either in the debt or in the equity market. So stay tuned, and one more time, a round of applause to my August and this September panelists now. Thank you so very much. Have a great day.